Global trade is starting to look unstable again. Tensions around one of the world's most important trade routes are disrupting global shipping, and that can move the stocks of the companies that keep that commerce moving. Thanks for joining us for another edition of 10 Stocks in 10 Minutes. Make sure to subscribe to our channel now so you never miss one of our videos. This week, we are counting down 10 shipping companies that could be directly impacted by the tensions and disruptions developing in global trade. We're starting at number 10 and working our way down to the company with the most direct exposure to moves in global shipping rates. Let's start with number 10, Euroseas, ticker symbol ESEA. Euroseas is a smaller container shipping company that moves goods between Europe, Asia, and the Americas. What makes this company interesting is its size. With a much smaller fleet than the global giants, even modest moves in shipping rates can have a big impact on its financial results. During the last container shipping boom, Euroseas generated significant cash flow as freight rates surged, and that showed in its earnings report. All beats for the past 4 quarters, and that growth quickly translated into some big stock moves too. This one is up more than 100% in a year and more than 16% in the last month. Now, despite all of that growth, institutions have not caught on to this small player yet at all, with just roughly 6% institutional ownership, very little analyst coverage, low short interest, and a PE ratio of just 3.38. This is a small cap stock to watch. If you're interested in other smaller up-and-coming companies, make sure to check out our brand new special report on the top IPOs Wall Street is watching in 2026. You can scan the QR code or click the link in the description to get that full free report on MarketBeat.com right now. Coming in at number 9 is Star Bulk Carriers, ticker symbol SBLK. Star Bulk operates one of the largest dry bulk fleets in the world. It ships commodities like coal, grain, and iron ore between major exporters and economies. And business was good for Star Bulk this last quarter with an earnings beat. The stock has been steadily climbing since mid-December, up 23% year to date, even with a 3.5% drop this week. Now, this stock could continue to see moves in the coming weeks if countries start scrambling for those raw materials. A company with a fleet this large can feel that shift in demand almost immediately. At number 8 is Genco Shipping, ticker symbol GNK. Genco is another dry bulk operator, but with a more modest fleet size. That smaller scale can sometimes create bigger swings when freight rates move. The company moves everything from grain to metals, connecting agricultural exporters and industrial markets all over the world. Genco also had a very strong last quarter earnings report, and the stock has jumped more than 60% in the last year. When global demand for commodities picks up, companies like Genco often see that impact even quicker than other carriers. Coming in at number 7 is Scorpio Tankers, ticker symbol STNG. Scorpio Tankers moves fuel around the world, including diesel, gasoline, and jet fuel. And right now, energy shipping is one of the most sensitive parts of global trade. Tensions around Iran and the Strait of Hormuz have put a spotlight on the routes that move energy out of the Middle East. About 1/5 of the world's oil passes through that narrow waterway, and if those routes become more dangerous or ships have to take longer paths around the region, demand for product tankers can rise quickly and push shipping rates even higher. This stock has already been rising rapidly, up nearly 50% year to date and nearly 100% for the year. But it is still under analyst estimates. The company also had a strong earnings beat last month. But like all of the stocks we've mentioned so far, this stock has seen a more than 4% drop this week. At number 6 is Frontline, ticker symbol FRO. If Scorpio Tankers is moving the fuel, Frontline is moving the oil that makes that fuel possible. Frontline operates some of the largest crude oil tankers in the world, massive ships that can carry about 2 million barrels of oil in a single trip. Now, these vessels connect the biggest oil exporters in the world with refiners in Asia, Europe, and North America. And when global energy trade gets disrupted, crude oil often has to travel much farther to reach those refineries. More distance means more demand for large tankers, potentially boosting shipping rates. This company has also seen a ton of growth in the last year, up 132%. It's trading above consensus now, but new price targets have the stock moving above $40 this year, even before institutions really get on board with the stock. Number 5 is Global Ship Lease, ticker symbol GSL. Global Ship Lease owns a fleet of container ships that are rented out to the big global shipping companies. So instead of competing on shipping routes, this company makes money by leasing its ships to the carriers that actually move cargo. And new analyst estimates this week show this stock moving higher on that rising demand. New price targets have the stock at $48 even after this year's 73% climb. Coming in at number 4 is Danaos, ticker symbol DAC. This company is one of the largest independent container ship owners in the world. Its vessels are leased by many of the big global shipping companies that operate international trade routes. When shipping markets get tight and ships become harder to find, charter rates can climb very quickly. During the last shipping boom we saw, companies like Danaos generated massive cash flow. It just posted a big earnings beat in early February. The stock has been moving higher, but not as rapidly as some of the other companies on today's list. Like Euroseas, this stock also has an incredibly low PE at 4.22, very little analyst coverage, and less than 20% institutional ownership. Before we get on to our top 3 shipping stock movers, I'm going to add this one to my Bridget's Buys watch list. I pick one stock from every video to add to my paper trading watch list to follow along with how the stock moves over time. While still risky, this one seems like one of the biggest unknown names on this list with a lot of future potential. Now we are on to our top 3 shipping stock movers. Number 3 is Matson, ticker symbol MATX. Matson operates some of the most important shipping routes between the United States and Asia. The company also serves Hawaii, Alaska, and Guam, making it a critical link in Pacific trade. Matson has built a reputation for fast, premium shipping services that can move goods across the Pacific quicker than many competitors. When supply chains get tight, that speed can become extremely valuable. And like all of the stocks on this list, this stock has had a steep pullback this week, but it is still up nearly 30% in the last 3 months and had a big earnings beat in late February. This company has far more institutional ownership and one recent analyst's price target boost to $213. Coming in at number 2 is Navios Maritime Partners, ticker symbol NMM. Most shipping companies focus on one part of the industry. Well, this company does a little bit of everything. The company operates dry bulk ships that haul commodities, container ships that move consumer goods, and tankers that transport energy. So instead of betting on just one part of global trade, Navios has exposure to several. If commodities start moving, they benefit. If container shipping picks up, they benefit. And if energy trade routes shift, they can benefit there too. That makes Navios one of the more unique shipping companies in the market right now. And like the others on this list, NMM has a relatively low PE thanks to a breakout earnings in February. Now, it does have nearly 70% institutional ownership, but still almost no analyst coverage. Now we are on to number 1. This company just delivered a surprise profit in a shipping market that many analysts thought would be much weaker. In its most recent quarter, the company reported a profit of 32 cents per share, even though analysts were expecting a loss of more than $1 per share. At the same time, the company has been modernizing its fleet with newer container ships that are more fuel efficient and cheaper to operate. But the biggest story right now is a pending acquisition. A major global shipping company has agreed to buy this business in an all-cash deal valued at $35 per share. With the stock recently trading around just the high 20s, that creates a large gap between the current price and the proposed buyout price. If the deal closes, that spread represents a potential upside of more than 20% from current levels. The company at number 1 on today's list is Zim Integrated Shipping, ticker symbol ZIM. Make sure to check out last week's 10 stocks video, where I detail the 10 oil stocks set to benefit from the rising global tensions. You can find that video here and find more stock ideas in a playlist of all of our 10 stocks videos that's linked in the description right now.